Alright traders, so last analysis of the week, it will be on AUD USD. So as usual, we will do the top down analysis. After that, we will take a look to possible entries, and lastly, we will take a look to the trade that I took last week. So let's not waste more time and let's do the breakdown. Alright, so to start the breakdown analysis, we go to the monthly time frame. So as you can see on the monthly time frame, the trend is currently bearish and we are making bearish structure, so with the lower lows and the lower highs. If you take a look to the last month candle, you can see that there's a long wick to the downside that represents seller exhaustion. This zone was a monthly resistance support zone. So now that we had confluence on this zone here, we can expect the price to retrace to the next confluence zone, which is the 50% of Fibonacci with the monthly resistance support zone and the support zone here that we broke and now that we will test back as a resistance. So we expect the price to maybe go to this zone here and then make another pulse. So this is only for the monthly time frame. Now we will go to the weekly time frame to see if we see something else. So now that we are on the weekly time frame, you can see that the trend is currently bearish and we are making bearish structures with the lower lows and the lower highs. You can see that we are currently retracing and we are sitting just under the confluence zone with the 61.8% of Fibonacci, the weekly resistance support, and a resistance zone that back then was a support that we never broke. We always made fake break, and now that we broke the zone, we are testing it back as a resistance. So now that we are done with the confluence zone, we can take a look to the candle pattern. As you can see, last week we made a doji with a big wick to the upside that represent buyer exhaustion. So the week before that, there was a lot of buyer pressure, but then we reached the confluence zone and the sellers tried to take control over the market, over the buyer, but they didn't succeed because the candle is still bullish, but we still made a doji, so indecision candle, so it had a lot of confluence to our idea, so to our sell idea. So our first target will be the weekly resistance support if we make a next pulse, which is a confluence zone with the structure point, the lower low that we have here. After that, if we take into the consideration the Fibonacci rule, our next target will be the minus 27% and the other one, the minus 41% of Fibonacci. But for me, I will just aim for this zone here. So now that we are done with the weekly time frame, we will go to the daily time frame. So now that we are on the daily time frame, you can see that the trend is currently bearish, but we are making bullish structures with the higher highs and the higher lows. But since that we want to trade the daily move, the weekly move, the daily time frame is kind of our entry time frame. So our first possibility to enter the trade is at the fake, not the fake break, but the aggressive break here. You can see that we made a little structure here, so higher high, higher low, and we only made a high. So if you break here, it's an aggressive break, and we can take the trade with our stop loss above the zone here. If we want to wait for the safe break, it's the structure point down here. The problem that if we wait all the way down here to take the trade for the safest one is that we'll lose approximately 300 pips. So 331 pips. So personally, I don't want to let go 300 pips because I don't want to take a more aggressive trade. So for the daily time frame, this will be my entry at the break of the support zone there. But since that the daily time frame has a bullish structure, our first target will not be the weekly resistance support here. It will be the confluence zone with the 61.8% Fibonacci and the resistance zone that we broke and now that we'll test as a support. So first target will be this one here, second target here, and the other one the minus 27%, minus 41% based of the weekly Fibonacci. So this is for the daily time frame. Now we will go to the 4-hour time frame. So now that we are on the 4-hour time frame, you can see that the trend is currently bullish, but we are making a bearish structures with the lower lows and the lower highs. So for my entry on this time frame, what I will do, I will wait for the break of the structure point here, which is an aggressive point because we only have a high here and not a higher high. So aggressive break. On the retest here, I'll take my entry with my stop loss above the last structure point. Like I said, on the daily time frame, our first target is the red zone. And if you zoom in more on the 4-hour time frame, you can see that we kind of have a little structure here, but we can see the structure way better on the 2-hour time frame. So that's what we'll do now. So let's go to the 2-hour. So now that we are on the 2-hour time frame, you can see that the structure is bullish with a kind of bearish structure. So the structure that we have is a double top here. And if we break the purple zone here with a big candle, you can take the trade on the retest with your stop loss above the zone. This trade is riskier than the one on the 4-hour, but the risk reward is higher and your number of pips will be higher. If you want, you can wait at the break of this zone here instead. So this is the same zone that we spoke about on the 4-hour time frame. So now we go to the 1-hour time frame to see if there's other possibilities. Now that we are on the 1-hour time frame, you can see that the trend is currently bullish, but we are making a bearish structure. So lower high, lower high, lower high. And you can see that there was a possible entry at the break of the structure here. So aggressive break, aggressive entry, but there was a possibility with our stop loss above the zone here. But we missed it. So our next possible entry base of the 1-hour time frame is the break of the green zone here, which is the point, the break of structure of this point here. But the green zone is the same zone that we spoke about on the 2-hour time frame. So if you want to take this trade, just be sure that we break the zone of the 2-hour time frame. Because if we break the zone here in between like the 2-hour candle, and then at the close of the 2-hour candle, we just retest the zone here. But on the 2-hour, it's only a big wick like that. We only tested the zone, and there's a high possibility chance that we just go up to the trend line here or even higher. So just take that in consideration, that the 2-hour is more important in this break of structure here than the 1-hour time frame. So this is pretty much it for my breakdown and my entries point on AUD USD. So now we will take a look to the only trade that I took this week, the last week on AUD USD. Alright, so this week I only took one trade on AUD USD, and this trade was based off the break of structure here. My entry was on the purple zone with my stop loss above here, and we made a bearish engulfing pattern that had a lot of seller pressure. So with my stop loss above here, I don't mind what we do after that because of it. So I'm still in this trade this week as we speak right now, and I took another entry at the opening of the market, but I will not talk about this trade right now. I'll talk about that next week in the same video. I'll do the same kind of video next week on AUD USD. I'll do the breakdown analysis. I will talk about the possible entries, and I will show you the trade that I'm taking and I will take this week. So see you guys in 7 days.